Justin is run by a bunch of investment bankers, and Morningstar's modus operandi.
Hi, I'm Eric Kobayashi-Solomon, co-editor of Morningstar Option Investor. And today it's my great pleasure to welcome Eric Chenoweth, who's Associate Director of Equity Research in charge of energy. Eric, thanks for coming.
Thanks for having me.
Okay, I have to start off with kind of a simple-minded question. To me, natural gas and oil doesn't make much difference. What's the difference between natural gas and oil?
Sure, very simply, you find them typically in the same spots of the world when you're producing them. But the end markets where they're consumed are a bit different. Oil tends to dominate the transportation market. Refined products like gasoline and diesel and jet fuel that move us around. Natural gas tends to be used for heating, home heating, commercial heating, and power generation are the biggest markets there.
So some shared drivers, I mean, generally oil is, if the economy is good and people are moving around and moving things around, then oil.
Certainly, both are economically sensitive. Gas has a little bit more of a weather feature to it.
Sure. Okay, so I just wrote a quick shot option idea on Sandridge Energy. It's a bullish position, kind of more speculative than we usually do.
All right.
But this company seems really interesting. I mean, November of last year, they were a natural gas E&P, a natural gas exploration and production company. Now they look a lot different. And can you just kind of walk us through how they've changed over the past few months?
Sure. This is a company that was well known for a big natural gas field they discovered in West Texas, called the Pinion Field in the West Texas Overthrust. And through a series of transactions they've done, they've made big strides towards becoming more of an oil company. Late last year, they announced they're going to acquire some oil properties from Forest Oil, another company we cover.
That was $800 million, something like that.
Yeah, $800 million deal. Got them more acreage in the Permian Basin, which is just north of where their gas properties are in West Texas. And then just this weekend, they announced that they're going to acquire more Permian Basin assets from a company called Arena Resources.
Right. So they've gone from being really a pure play natural gas company to now it's about 85% is oil?
Yeah, so the way I'd look at it is they were almost all their value and all their production for the most part came from gas last year. There's a little bit of oil, but not a whole lot. And now they've moved to about 35% of their production will be oil, but about 85% of the value will be oil.
From a strategic perspective, why do you think these managers would want more exposure to oil right now?
I think there's a couple things. First, they've come out and said as a management team they're very bullish on oil. And this is something that we've seen echoed across the investment world as well. Not necessarily at all companies. There's definitely been a shift, though, across various companies to favor oil to gas. If you look at the two commodities right now, oil's priced much more favorably than gas on an energy equivalence basis. So you can see the allure towards oil. You're getting a greater value for the unit of oil you produce versus the gas equivalent. But there's a couple other things too. I think people see that oil supply is a bit more constrained than gas. There's a lot of fears. There's a lot of fear out there that a lot's been discovered on the gas side, especially in the U.S. And this abundance is going to keep gas markets suppressed.
Natural gas, it seems like there's a lot of discoveries being made, a lot of production. These guys wanted to get more exposure to a relatively, let's say, rarer or dearer commodity. Yeah,
it also does give them a bit of a diversification angle. So if you think from a safety standpoint on their part or from a strategic standpoint, they aren't going to be completely exposed to gas. So if gas prices are weak, now they've got the oil. They go to their bankers. They might be able to borrow against the oil assets. Where if gas was weak, they could have their borrowing dry up. And
so they've got some of that upside
because of this. Yeah.
I've heard you talk about your investment thesis for natural gas and oil just recently, and I think you're making a very convincing case that right now natural gas prices are depressed, but that it won't always be this way. We
think that it's hard to imagine gas prices staying below $5, and we're well below $5 now. And although we understand the abundance argument that people are making, we say it's abundance at a price. This gas is abundant, but it's not going to produce itself. There's going to be a lot of cost involved with that. We think that cost is probably 50% higher than where you see current gas prices. I also think it's a really interesting time to think about gas versus oil. because we're in a very seasonal kind of transitional period.
Right.
And it happens every year. This is a period when gas is really weak because your winter home heating demand's drying up. You're kind of in limbo on the demand side for gas, but with oil, all the refineries are out there bidding up oil now.
On the other hand, you've got
summer driving season.
Right,
So now's the time when you really see the commodities diverge. And so if you're thinking about finding some extra value in gas relative to oil, now's the time to, I think, look at that and possibly benefit from some of these longer-term theses we have and we see from a cost side with gas.
So we may actually see some natural gas companies getting cheaper right now as that kind of seasonality influences.
Yeah.
Well, this Sandridge idea is a really interesting one. Thanks very much for turning me on to it.
Thanks for having me.
Thanks very much for joining us. Please stop by the Option Investor site where you'll find many more great option ideas based on Morningstar's fundamental research.
At Morningstar, we feel it is important to schedule regular checkups of your investments. This is the reason we're pleased to announce Portfolio Monitor, a new and easier way to keep track of your investments. With a few clicks of the mouse, receive a monthly report that provides a comprehensive and customized summary of your portfolio, sent automatically to your inbox. Portfolio Monitor provides a concise digest of all the best features of premium membership. Become a premium member with our 14-day free trial to start receiving Portfolio Monitor today.